Today we are going to solve the question Bazeele from the session. Wait, let me check which session is it. This is from March-June 2018. March-June 2018. Bazeele. So the first requirement is evaluate whether a value-based management approach is appropriate for Bazeele. So our requirement is to evaluate whether a value-based management approach is appropriate. Evaluate means good and bad and a conclusion. So what to evaluate? A value-based management approach is appropriate for Bazeele. Is it going to suit? Is it going to be appropriate for the company, the BVM, for the company Bazeele? So we need to evaluate this. Then the second requirement is explain. What is the verb explain? What to explain? Explain to the CEO what the changes Bazeele would need to make to its performance measurement and performance management system if it were to adopt a value-based management. So what is the requirement? The requirement, if the company wants to adopt value-based management, what changes the company needs to bring in its performance measurement and management system. I'm saying again, to adopt the value-based management approach, what changes does the company need to bring in its performance measurement and management? And finally, they want a calculation of EVA using the information in appendix 1. We are given with appendix we are given with an appendix. So advise the CEO whether Bazeele has generated economic value added for its economic value for its shareholder. So EVA, economic value, is generated if a positive EVA is found. So these are the three requirements. Now let's read the scenario. I'm giving you 2 minutes. Please pause the video. I'm also pausing the recording. Pause the video and read the question once, and I'll read it again. So the scenario is Bazeele hires out plant and machinery to small firms working in the construction industry. Bazeele's senior managers, including the CEO, worked in the business for 30 years. And they own the majority of shares and of this business units. During the time, Bazeele has acquired many smaller plant hire businesses. So of these businesses, some units have underperformed after acquisition. So what they have done with them, they have sold them or restructured. For example, to increase their operating margin, Bazeele has recently diversified by hiring out large items. So how diversified? By hiring out large items of plants to large construction firms. Hiring out large items of plants to large construction firms working on major infrastructure projects. These projects can last up to 10 years. So 10 years, time value factor. 10 years is a long time. Strong growth in the general economy has increased the number of these large projects and has also led to predicted large increase in bank interest rate. So increase in bank interest rate will increase cost of capital because higher interest rate will have to be paid. The shareholders' objective is for Bazeele to maintain its historical return, ROCE. Maintain historical return. Historic return means the return they have earned previously. So managers at business units are given the objective of maintaining net profit margin. So the objective of managers is what? Objective of manager is maintaining net profit margin. But the question is value-based management. So value-based management focuses on creating value for shareholders. But here the measure is ROCE and the objective is maintaining net profit margin. Maintaining or earning profit doesn't mean value has been created. So this is conflicting. You have to understand that their objective is to maintain a historical return. Now we are talking about the value-based management, and value-based management focuses on creating value for shareholders. So some changes needed because ROC is suggested here, or ROC is being used by the business, but this is conflicting. Similarly, managers at individual branches of business units are given the same objective. So managers are also given the objective of maintaining net profit. So following 2 years of poor performance, so after performing badly, it has been suggested the CEO that Bazeele would benefit from the adopting. So okay, they have understood the importance of value-based management now, and they are thinking of adopting the value-based management approach. The CEO requires your advice. So this is the requirement, your advice. The shareholders are unsure what BVM is, so we have to tell what is BVM. So in brief, we have to tell what is BVM, though it is not asked here. We can say whether it will benefit Bazeele and what changes the business would need to make. So to adopt value-based management, there some changes will be needed, because they are focusing on profit, they are focusing on return on capital employed. So some changes must be needed. All managers in the business are already clear what their objective are. So managers knows that their objective are to increasing profit. So they will try to increase profit, which is a problem of short-termism. Okay, for example, one business unit manager recently postponed some expensive staff training on improving customer satisfaction, because they have to meet the target of profit. So they are postponing what? They are postponing the expenditure, value creating expenditure. Customer satisfaction is a improving customer satisfaction or staff training are activities that will create value in future. So the managers are not interested in those expenses to meet his profit target. Okay, he has postponed and he thinks that this is correct. Our recent poor performance has meant we cannot afford this sort of expenditure. So their performance is poor. So if they do this staff training and customer satisfaction expenditure, they will not meet the profit target, especially as we have no information on what levels of customer satisfaction actually. Personally, I dislike change, but would not object to the adoption of BVM if it was thought to be beneficial for Bazeele. The shareholders have heard that economic value added can be used. So EVA can be used. Since this is linked to value-based management, we have to have the knowledge of book, we have to have the textbook knowledge to understand that EVA has a connection with VVM, because value-based management thinks of creating value and EVA measures whether value has been created or destroyed. Okay, but this has not yet been calculated. This means you have to calculate it. This is also linked with the requirement 3. Using the information in appendix 1, advise the CEO whether Bazeele has generated economic value added for its shareholders. So informations are given here. Now the answer 1. The requirement 1 is already discussed, the problems. So how to draft the answer? Let's see. In the context of value-based management, value of a business is measured by discounting cash flow at the business's cost of capital. So how value of business is measured? By discounting cash flow at the business cost of capital. So when the investment return, when the return exceeds the cost of capital, it is considered that value has been created for shareholders. But when the return are lower, than the cost of capital, lower than the cost of capital, it is considered the value has been destroyed, because the minimum required rate of return, that is cost of capital, is not earned. So the value-based management approach is to ensure that all activities. So what does value-based management do? It ensures that all activities and decisions in a business, whatever the activities and whatever the decisions are taken in a business, are undertaken for what? Undertaken for creating value for shareholders. So currently the organization, the Bazeele's overall objective is to maintain ROCE at historical level. So I told what is historical level, but this does not necessarily create value for shareholders, because we know that ROCE is not directly linked to shareholder value maximization. Moreover, RO is a profit based target. It has a problem of short termism. and moreover it is prone to manipulation. It can be manipulated to achieve target. So ROC, increasing ROC, achieving a high ROC doesn't mean that the value has been created. Okay, Bazeele has diversified into hiring large items of plant. So what are they now doing? Hiring out large items of plant for use in major infrastructure projects. So these projects last up to 10 years, so long time. So time value of money is likely to be significant. Time value of money, because this is a matter of 10 years, so the time value of money is likely to be significant as the initial capital expenditure for the plant. So long-term hire agreement may give an acceptable ROAS, since these are long-term hire agreements. This can give positive and give better ROC, but may have a negative net present value just because of the longer time period, and hence if a negative net present value, it represents the value of the shareholders has been destroyed. Moreover, there is a prediction that large increase in bank interest rate. So increase in bank interest rate will increase cost of capital. So the prediction of large increase in bank interest rate will increase Bazeele's cost of capital. So increasing cost of capital will reduce the NPV further. Similarly, managers and the business units are given the objective of maintaining net profit margin. So their objective is to maintaining net profit margin. Thus managers may avoid. So to earn this net profit margin, managers may avoid some expenditure, some capital expenditure or some revenue expenditure to maintain their profit margin and to earn a greater ROCE. Thus managers may avoid. So see, the managers may avoid activities which reduce profits in short term. So to earn a profit in the short term, managers may avoid activities such as staff training. It is written here, postponed some expensive staff training and improving customer satisfaction. But staff training will increase staff's experience, knowledge, expertise, skill, and improving customer satisfaction will automatically increase revenue growth in future. Will bring the customers again and again to the business. So it will add value in the future as well. It will help to maintain growth. But profit-based target will demotivate the managers to incur such type of expenditure. So with BVM, decisions are taken to create value for shareholders by considering value drivers. So in the BVM, decisions are taken to create value for shareholders by considering value drivers. I told it earlier that all activities and decisions that create value for shareholders, which are any factors which affect the value of the business. So which are any factor which affect the value of the business. Anything that increases the value is the value adding activities, and that reduces the value will be ignored in VVM. So value drivers may be non-financial. It is not mandatory that value drivers need to be financial. So non-financial, such as it can be customer satisfaction, it can be anything such as customer satisfaction, which may have been improved by the postponed staff training. So by increasing the staff training, by increasing the skills of the staff, the customer satisfaction, more customer satisfaction could be earned. Therefore, a value-based management approach is suitable for the organization, as it will encourage creation of value for shareholders. So that is the end of the requirement A. The answer is really big. We don't need to write so many things, but whatever we write, we have to give a justification, we have to give a reason for saying something. We shouldn't say increase in interest rate is risky, but we will also have to say that increase in interest rate will increase the cost of capital. So we shouldn't say that ROC is not good. We should say that ROC does not directly link to shareholders value creation, or does not necessarily create value for shareholders. So that is the way of answering a question. Then the requirement 2. What changes Bazeele would need to make to its performance measurement and management system to adopt BVM. So to adopt BVM, what changes does the business need? So the requirement is what changes is necessary to adopt BVM. First changes need, BVM would need to use different set of performance indicators. Currently they are using ROC, ROS and net profit margin, but they do not necessarily indicate shareholder value has been created. So instead of ROC or net profit margin, they can use economic value added, because this is a tool by which shareholders value creation is measured. So EVA can be a good measure, but the problem is EVA calculation is complex and lengthy, but EVA motivates managers to take such decisions, to encourage managers to make decisions such as staff training which have future long-term benefit. Moreover, by encouraging managers to make investments which give a positive EVA, value will be created for shareholders. So in BVM, managers would be given targets according to their areas of responsibility. So the targets will be changed slightly. Their target will be based on their areas of responsibility that adds value to the organization. For example, the board may have objective to maximize value by making acquisition which create value. This is the board's objective. So branch manager's objective may be focused on non-financial value drivers that can maximize value. So managers objective should be such objective, anything non-financial or financial that adds value to the organization, such as customer satisfaction is a long-term thinking for the organization. So to identify value drivers, we are discussing about the changes of adopting value-based management. So to identify value drivers, to adopt value-based management, value drivers need to be identified. So to identify value drivers, Bazeele will need good information. And the information that is required, that need to be accurate, reliable and timely. For example, it is unclear whether the current management information system is able to provide good information. So we are not sure whether the current system provides good information, such as it is said that the CEO said that the information on customer satisfaction is not available. So information on customer satisfaction is not available. This is mentioned in the scenario that we have no information on what levels of customer satisfaction actually. So information required, so quality information, timely information, accurate information, reliable information is needed for making the change of value-based management. Moreover, resources such as financial investment, time and training may be needed to improve Bazeele's management information. So this is another fact of consideration, that time and training is needed for improving Bazeele's management information. So managers may resist the change in culture. Manager may resist in change in culture because it is said that he dislikes changes, which would be required to adopt BVM. Change mindset it is needed, but this is said that he dislikes changes. So the CEO said this. So this is the tone at top for what would be a disruptive and major change to Bazeele. So the CEO also need to be willing to the change, or else it will be really tough. However, the benefit of adopting BVM seems to outweigh the cost of doing so, because they are thinking of creating value for shareholders. So the BVM will bring some changes in metrics and the activities and the decisions. So it seems the decision of changing to BVM seems to outweigh the cost of doing so. Okay, that is the end of the requirement 2. Finally, the requirement 3, calculation of EVA. It's a simple calculation. Just read the appendix 1 for calculating the EVA. Net profit after tax 10 million. So this is our net profit. Capital employed 250 at the start. So we have to take the beginning capital employed, and the interest charge for the year was 15 million variable rate loan with the interest rate of 10%. So interest 15 million at a rate of 10%. Bazeele is funded by 60% by debt and 40% equity. The cost of equity is 12%. So we are given with the KE, we are given with the tax rate, we are given with the interest rate, we are given with the weight of debt and the weight of equity 60-40%. The depreciation charge for non-current asset for the year was 6. This is accounting depreciation, and the economic depreciation was 14. So this is economic depreciation. We are given with the accounting depreciation and economic depreciation. In EVA calculation, we need to add back the accounting depreciation and we need to deduct the economic depreciation. At the start of the period, the accumulated economic depreciation of current assets exceeded its accounting depreciation by 16 million. What does it say? The accumulated economic depreciation exceeded accounting depreciation. So economic depreciation is higher than 16. So if the accounting depreciation is 10, if the accounting depreciation is 10, then the economic depreciation is 16. So if we set off 10 versus 10, then the remaining 16 needs to be deducted at the start of the period. So we have to deduct 16 million as economic depreciation because this is higher than the accounting depreciation. Then the BD at the start of the year was provision 4.8 million, which a provision of 4.8 million at the start of the year was made in respect of debt owed by a customer who has since repaid it. So we have already earned it. Within the current profit or loss accounts, there is an expense for 0.6 advertising and trade. This is the value adding activities, this is a market building item, so we have to add it back. Then this led to several inquiries from the customers involved in large infrastructure. What can we say here? We can see that the advertising in trade magazine has increased customer query. So this has built our market, which has resulted in Bazeele signing at least 2 contracts. So using the advertising, they have got contracts. So this is the value adding activities. This needs to be considered while calculating EVA. So let's see the calculation. Let's see the EVA calculation. We are starting with the net profit after tax, that is 10 million. Net profit after tax, that is 10 million. Then we are adding the accounting depreciation of 6 and deducting the economic depreciation 14, and we need to add the interest, that is net of tax. So interest 15 less 20% tax rate on 15, this is given here. The tax rate is 20% and the interest is 15, so we have to deduct this. We have to take the net interest, net of tax, that is added. Then we need to deduct the reduction in bad debt provision. This is the current year. This has been earned this year, so this needs to be deducted. Then again the advertising expense, this is said here, that is 0.6. This is a market building item, so this needs to be added. That's all. Finally we are arriving the figure of NOPAT, and we know the EVA equals to NOPAT into economic capital, NOPAT less economic capital employed into cost of capital. So the economic value of capital employed, that is the opening capital employed, deduct the accumulated depreciation, that is economic depreciation, so it is deducted, and add back the provision because this is a non-cash item. So the year end economic value added, we got NOPAT and EVA. Now we need to apply the formula NOPAT minus capital charge. So what is capital charge? Economic capital employed into cost of capital. So what is cost of capital? We need to calculate the WACC 60%, 10% net, 20% tax, then the 40% into 12%. I'm showing you the calculation here. The cost of equity is 20%, after tax cost of debt 8%. How? 10% less tax. Therefore the WACC will be 9.6%. How? 40% weight of debt into weight of equity is 40% by 12% will be multiplied by 12%, and 60% will be multiplied by the 8%. That is the WACC. So we have got a negative EVA. What does it say? It says that the value has been destroyed. A negative EVA indicates the value of shareholder has been destroyed. So what did they say? As the economic value added is 13.1, a bracket figure, so the organization has destroyed value for shareholders. That's all for the question. That is, what was the question name? Bazeele. I hope you understood all. That's all for today. Thank you all.